All right. Hey, everyone, welcome back. Today is Friday, and let's get this thing started. If you're new to the stream, welcome. Here's how this works. So first thing I'm going to do is we're going to switch these charts over here to the NASDAQ futures. Right now it's on Bitcoin because I want to make a couple of points about Bitcoin real quick, just to update my analysis that I produce each week. But so what we're going to do here is we're going to look for trades in the NASDAQ futures using the Trade Scanner Pro. Now, the whole idea here is I'm trying to beat an evaluation account from Apex using the Trade Scanner Pro in a sustainable way. You can see the account here. Okay. Now, this previous Friday and on Wednesday, I had two losing days. Okay, so not exactly this environment hasn't been exactly easy. So for that reason, today I'm going to probably just trade one contract. I mean, the price action, I was looking at the overnight price action. It doesn't look that good to begin with, right? And I believe we had our core PCE number earlier today. Well, I'm going to have to double check on that. By the way, if you're watching in the chat, let me know if core PCE came out or if we have that number at 10 o'clock or 10:30 because I haven't checked. Um, if you guys could let me know that. But anyway, the point is I'm going to be working with one contract today, one micro lot, because this environment is harder and I don't want to keep giving money back, right? So I'm still green in the account, but barely. And so I'm going the wrong way. I have to be lighter with it, right? So we'll see how that goes. Anyway, so what we're going to do is we're going to conduct the analysis first, because when you're using the Trade Scanner Pro, remember, it's a confirmation tool. So I have to do analysis first and then use it to confirm my idea that I come up with through my analysis. Now, the analysis is not very hard. It's basically like a simple two-step process, which we're going to do here, right? So if you guys have any questions or if you want to share what city or what country you're from, that's always a fun fact. You can share that in the chat. And also, it would be nice if you guys said hello. Man, yeah, I got like no one watching me here. All right. Oh, by the way, on Wednesday, I was in the middle of telling a story, and I don't know if you guys were watching, but I got cut off. It's because the power went out here. Okay. Because that's what happens, I guess, when there's no reason for the power to go out. It just went out for the whole area for like, a little while there. So apologize for that. Hey, Henrik, how are you? Actual, same as forecast on both GDP. Oh, okay, thanks. So core PCE came out. Hopefully you have something positive. Okay, Hussein, sorry to hear that. Well, yeah. So look, it's always a positive thing here because we're always going to accumulate new knowledge and we're going to learn things. Nothing on the calendar. Okay, cool. Thanks, guys, for keeping an eye out for me. All right, so just real quick before we get into the Nasdaq, I want to talk about Bitcoin real quick, right? As you guys can see, this was my analysis from Sunday. I pointed out that I have an arrow that's still here. I haven't changed this chart, right? So I pointed out that this was a possible bearish or lower high area, and I was anticipating what? A pullback. Okay, look, we got the pullback. So it took a little while for that to occur. And now from this area, I'm anticipating a bounce. That's what this illustration is. I put an illustration on my chart every week. It's not always exact, but as you can see, if you were following this, it at least should have kept you out of trouble or helped you to form the right expectations, right? Now, was there anything that prompted me to anticipate such a pullback? Well, anyone notice this? What is that? Can anyone tell me what that little V is right there? Can anyone tell me what this is? And if you guys don't know, say I don't know. And that I wrote that's part of my wave analysis, right? What is that? And why is that significant? Can anyone tell me? And I don't know is an acceptable answer. But that right there is what helped me to anticipate this. Meanwhile, I was watching like the keynote from the Bitcoin conference in Vegas. Hey, Nugs, how are you? And Michael Saylor's on the stage there, and he's like, Bitcoin is going to go up forever because I'm going to buy as much as possible because the Fed is going to print money forever and I'm going to take all your money and I'm just going to buy trillions of dollars. So by next year, this time, I can guarantee Bitcoin will be at $1 trillion. I mean, come on, man. Come on. And since that time, since his extremely optimistic address, we get this, right? We get this little pullback right here. On top of that, they were running some kind of Ponzi scheme. I don't know if anyone saw that, but I was on the YouTube video. They had the QR code, and he's like, "Imagine yourself scanning the QR code." I'm doing my that's my Michael Saylor voice. Imagine yourself scanning the QR code and depositing, following the simple instructions, and depositing 1 Bitcoin, and you'll instantly get 2 Bitcoin back. It's the magic of blockchain technology. So you can deposit 10 Bitcoins and you'll get 20 back. I'm like, what is this? Come on, man. By the way, I wasn't going to deposit any money because I don't know. I just don't trust something like that. I know it was Michael Saylor. It was the Bitcoin conference. It couldn't have been a scam, but what was that? How do you do that? I don't know. So anyway, all these people that doubled their Bitcoin and Ethereum positions, I guess they took their money off. I guess they took their money. They sold their whatever because it certainly wasn't helpful for the market, right? Yes, Nugs, you got it. Wave 5. Yes, Nugs. Wave 5. Thank you, Nugs. Wave 5. Whenever you can count 5 waves, it doesn't guarantee that you're going to get a corrective move, but it increases the chances dramatically, right? And meanwhile, it's usually when things look their greatest or their worst, if it's a bearish wave 5, right? So, how that's helpful for one is you know that the potential of this thing continuing higher becomes limited. And that's why I'm telling people, why would you invest at 110K or 112K or 108K? Why would you do that when you're in the middle of a wave 5? It means there's not much potential left. So even for longer term investors, why not wait until you get the better prices? Because chances are you're going to see better prices soon, right? Every time I see a wave 5, I'm not always right, but a lot of times, even back here, this was a wave 5. It wasn't the wave 5, but I was counting 5 waves. So, and you got a corrective structure, right? And better prices were ahead. Better prices, meaning lower prices, were ahead. So, this corrective move, I don't know how far it can go, but a reasonable area would be 102 to 100K. That's what I'm anticipating here. That might be a good move for a swing trade, right? If 100K breaks, you're looking at 95K, right? So, and if that breaks, you're looking at 90 to 85. So it's all about if. The market has to provide evidence. The market is the leader. The market is the one that sets the frame. We are nothing but followers. Do you have this video? Do you have also this video on YouTube? I'm not sure what you mean, this video. The analysis that I'm talking about is on TradingView. I publish it every Sunday. And then on Monday, I do like an analysis stream where I update it. So if that's what you mean, yeah, you could find, if you look at my Monday stream, I talk about this. But the actual analysis is on TradingView and I publish that on Sunday. All right, anyway, so enough Bitcoin. Um, well, on Monday I streamed. Yeah, this is in real time. Yeah, on Monday I streamed on Monday, updating my analysis that I published on Sunday. So you can go back and you can watch it. It's on my it's on my channel. It says Monday market forecast or whatever. You can watch that. All right, so let's switch over to the NASDAQ. All right. Yeah, I'm not one of these after the fact guys that like, oh, hey, I told you in my dreams, I told you that Bitcoin was going to do this, and look, right? No, I actually publish it, and then you can see. In fact, this chart that I have here was a chart that I published on Sunday with this illustration before this move. Okay, you can do the before and after. Again, I'm not sitting here trying to act like I'm all big and bad. I'm just saying I put out quality content and no one cares. Okay. My followers don't go up. No one subscribes to the Trade Scanner Pro. It's a really poor use of my time, to be honest. Okay. So, but I have to point out that at least I'm putting out quality content because otherwise no one notices. All right, let's switch this over to the NASDAQ. MNQ1. And we'll go over. By the way, next Friday, I might as well mention this now. Next Friday, I will not be streaming at this time because I have to go. There's a conference in the city that I have to go to. It's like Blockchain NYC, and they're doing a thing with generative AI and financial applications or whatever. It's like an all day event. So I have to go there to that because I joined it, and it's like the whole day. So they're doing it on a Friday, but it's there's going to be all these big. I mean, Goldman Sachs is going to be there, just to name a few of the companies that are going to be there. And I would like to, go there and learn a few things. So I'll remind you guys again. I'll remind you guys again during the week, but I'm just letting you know now. So next Friday, I will not be streaming at this time because I'm going to be in the city. All right, cool. All right, no problem. No, that's you guys are free. I'm happy you're answering questions and participating. You're not interrupting. I'm happy to answer your questions. So let's get to the Trade Scanner Pro portion of the stream. Right now, I'm going to switch this to one contract, like I said, because I've been getting beat up on this thing, and there's no reason to keep throwing around larger positions if the market is very hard, right? So you reduce risk. Now, oh yeah, but by the way, hold on, let me see what's going on over here. Yeah, man, YouTube. I don't. All right, here's my complaint. Let me give you my complaint. Yesterday, I was looking at some of the other streamers, that stream at this time, and there's guys like they're just doing complete nonsense, right? Some of them, and they have like 300, 400 people watching the stream, and they're all like. You look at the suggested feed, and they're all like grouped together like this. They're all, you see all the live streams. I would imagine mine is not on that list because I have 5 people on YouTube. Like seriously, that's my numbers. I was looking at my other YouTube numbers. My numbers don't grow; they go the other way. So I know I need to do things to optimize the algorithm. I haven't done those things, but still, I'm watching people that provide very little value, and they have way more. I mean, look, I'd be happy with 100 people watching me on YouTube. I can't even break 10. That's sad, right? Would you guys agree? That's sad and pathetic. I don't know why I do this. When I see these numbers, like it's like I just want to like I don't know. I want to start drinking or something, and I don't drink anyway. All right. So and these numbers, it's the same every day. I never see any improvement. Okay, so enough complaining. Let's talk about this Trade Scanner Pro situation, right? Now, as you guys know, we have to do our analysis first. Oh, hold on a second. Um, I know who's saying it. I don't drink, but I think about it. Okay, I think about it. So here, let me to put up my little thing. So if you're watching me on YouTube, do me a favor. I know you guys have done this, but I just have to put this just in case someone new is watching. Let me put it on here. Where is it? This one over here. I can't see my screen. Yeah. So if you like if you like the content, please subscribe. Please like the channel and press the button there, the notification bell, because that's supposed to help. Although I have not seen any help from it, it's supposed to help. And if you're watching me on Twitter, do me a favor. Um, Retweet my stream. Okay. Yeah, actually, I do. That's actually what I only drink water. I really don't drink anything else. So yeah, I'm just joking. I'm joking. I'm not going to start drinking. So I got to do something when I see these depressing numbers. Maybe I need to go talk to a therapist or something. Anyway, or no, I need to talk to a marketing what do you call it? A marketing consultant so they could remind me that I'm wasting my time. So anyway, all right. I know it's Friday, man. I'm going on rants all over the place. Let's do some work here. So as you know, we do our analysis first, and I like to begin with the daily time frame, right? Now, the daily time frame, again, this analysis is not hard. I repeat these same two steps on every single stream. All I'm looking for here on this time frame are support and resistance levels. That's it. I don't care about the price history, right? It's not that important because that's what when we look at the smaller time frame, that's when that's going to be relevant. So right now, I'm only interested in the current overnight low. I'm interested in yesterday's low. I'm interested in the current overnight high and yesterday's high. By the way, yesterday, because this market has been so tough intraday, this weekend, it probably has to do with volume and stuff like that. I said, well, let me try the overnight session. So I got up at 4 a.m. and I said, I'm going to trade the London session. I actually was able to do a little bit better in the London session than I do in the US session. Because you know why? The market was on the smaller time frames, the market was actually producing trends that were following through. And when a trend follows through, I can make money. When the trend is in transition and I'm not sure which way it's going, I think it's doing this, I think it's doing that, that's when I lose money. So follow through is very important. And in order to get follow through, we need volume. That's why 9:30 to 10:30 is usually a higher volume time. And that's typically where we see follow through. Okay. Anyway, so I got my levels, right? Now, I switched to my 1 hour time frame because the 1 hour gives me a sense of context or momentum. And momentum is what I need to get follow through. So let's look at, so now over here, we're going to look at our 60-minute chart over here. You could use a 30-minute, that's the wrong chart. You could use a 30-minute chart. I like to use a 60-minute. It's just a little simpler. It doesn't really matter. And I'm just looking at the general structure. Okay. So look at this, right? So that's from the other day. And then this is yesterday's price action over here, right? See this overnight. This was the overnight on Wednesday night. This was the Asian session. I actually that was pretty decent. It's very rare that you get this during the Asian session. Then this was the London session right here. All right. So I was obviously able to pull something out during that, right? Look at the US session. This sucks, man. This sucks. Look at this. And then look at this overnight was horrendous, but I was not active there. And now look, so we have the next session. Here's the next US session here opening. And what do we see? I see a lower high. And we're sitting at support. Lower high is likely to lead to lower low. Now, we're sitting at support. What about all this bullish structure? Well, okay, this bullish structure is nice to see, but the problem is there's a transition happening here. I should not see this in a bullish environment. I see a lower high and an attempt at a lower low. That's bearish, right? On top of that, I see this. And that's like the equivalent of like a mother bar, or that's an initial move. That's a pretty decent sized move. And we couldn't even like retest any of like the 50%, the 618, nothing. We couldn't retest anything. This thing barely bounced. So that to me looks like weakness, right? Now, people mentioned here earlier in the chat, core PCE came out earlier today. Clearly it wasn't helpful. Okay, it wasn't bullish. So I'm going to have to lean bearish. These candles are red. These are 1 hour candles. They're red now. We are flirting with a support, right? The overnight low. Okay. But if we're going to agree with the bearish momentum, that means it's reasonable for supports to break and resistances to hold. So I have the support level, which if I'm sitting right at the support, I probably don't want to short into the support. It'd be nice if we were below the support and the support becomes a resistance. That would be ideal. Or maybe we test this resistance, which was yesterday's low. That could be a resistance today. That would be also a good place to look for shorts. All right. So this information basically aligns me. I'm planning to work on the short side. and I have some levels for reference. Okay, analysis is done. It's that simple. Now we use the Trade Scanner Pro to confirm. So I'm switching over to my 30-second chart because remember, these are the time frames that I'm active on, right? And make sure this is a 1 minute. These are the time frames that I'm using the Trade Scanner Pro on. Let me turn this on. And when you get the Trade Scanner Pro, remember, you have to turn these things on. These controls have to be turned on. If you don't turn them on, then you're not getting the most value out of the script. Now, again, if you subscribe, I'm thinking about changing my subscription model a bit because I'm not seeing much traction, right? So people clearly don't appreciate the resource that I put out there and that the 14-day free trial exists. That's the impression that I get based on the numbers that I see. So I'm thinking about this, about basically taking it away because no one subscribes to it anyway, and then making it available once in a while. Like maybe once a month, I'll come out and say, okay, it's available now, and no more free trial. The free trial will be you're watching these streams. That's the free trial. And I'm demonstrating it on the stream 3 days a week. That's your free trial. That's what I'm thinking. I know that might not be the most positive thing in the world, but I have to create some kind of maybe that will help stimulate demand because there's no demand. All right. And like again, I put a lot of time into this and whatever, and I don't see much, you know, you know what I'm saying. Anyway, if you guys have any comments about that or any, just let me know. I'd love to hear. People that have the Trade Scanner Pro now won't be affected, but I'm talking about people that are interested, potential users. They'll be limited to when they can get it, right? Like maybe once a month, like maybe like the third week of the month, I'll open up and say, okay, Trade Scanner Pro is available only for the next day or two, and otherwise you're gonna have to wait another month to get it, and you're gonna have to watch my streams, and you're gonna have to, you know, you're gonna have to fantasize about it because you're not gonna be able to get it anymore, right? It's gonna be maybe if I limit the supply like that, because right now it's freely available, 14 days, no one cares, no one signs up. All right, that's just reality. And that's one of the reasons why too, working on the retail side is just kind of, I don't know why I do it. I probably would be more useful to like the institutional side of this business. So, all right, enough ranting. I know it's Friday. I complain too much. Hussein, you want positive messages? All I'm delivering here are negative messages. I apologize. Let's talk positive. You could put a code in the middle of the live stream instead so people are watching. A code? What do you mean by that, eh? I don't know what you mean, a code on the live stream. Like what I'm thinking is, if I say, okay, everyone, it's available, let's say I take it away, right? No more Trade Scanner Pro, no more, it's no longer available. And then, in the middle of whatever, I wait like 2 weeks and then I put out a code. Say, okay, it's available. Okay, it's available, but it's only available like today. And if you don't sign up today, and no more free trial because no one appreciates it, right? So the free trial is you get to watch me demonstrate it every other day. And if you think it's right for you, you know, and I'll probably just do like a one-time payment, like, I'll do like the yearly payment, one-time payment, and that's it. The reason this is not a random idea. Actually, I got this idea from one of the guys that I met when I was in Andorra. um, he runs like a similar thing, but in Italy, right? And he told me that in Italy, there's certain rules that the country, there's certain regulations. You can't just sell a script. He said, when it's like financial advice or something like that, like there are rules. So this guy, what he has to do is he has to like sporadically put his script out and say, okay, it's only available right now for the next hour, and then he has to take it away because I guess regulatory wise, he's not allowed to do that. Something like that. He told me. I don't know how Italian rules work. Anyway, those countries, man. That one is one of the biggest problem with the EU is they overregulate everything. Okay, a code for 2 weeks for being real viewers. Okay, that's interesting. I don't fully understand the idea, but okay, maybe you can explain it really a little bit more. Yeah, some kind of strange. He said because of regulations, he can't do like what I'm doing here. So, and it's specific to Italy. Italy. Okay, look, we got a signal here. Okay, hold on. Let me stop ranting. Let me look at this for a second. Um, remember, I switched to one contract. All right, I'm going to give it a try. I'm short one contract, one micro lot, because I'm not doing two anymore. Because this market's been very hard. Now, okay, I don't like that so far. What is the risk on this? 30 points. All right. And it looks like it's going to go straight against me. Now, here's the thing with this. So let's look back here a bit and let's examine this. I should have waited for this candle to close, but all right, I'm in. But I only have one. The one thing about one contract is I have now a little bit more flexibility to add. You know how we've seen these opportunities to add. So now, if I have an opportunity to add, I would only be putting on a second one. So all right, and if I get stopped out, all right, it's not a lot of money. It looks like they're going to stop me out. Man, that was quick. Man, it could have at least given me a few minutes in the trade. I'm gonna have to buy this thing back. But all right, 30 points. Let it go to the stop. 30 points. Man, that's what. So now, all right. So let's all right. Stopped out. Goodbye. Let me get out. No big deal. That's why I'm going with one. How much money was that? $60. All right. That's not horrible. Now, so my next one, I'll do one again. I'm not going to put on two. So here's the thing. We just talked about short analysis, right? Remember all that short talk I just gave you? This market is not exactly cooperating with that, is it? This right here, that structure is not bearish, right? I see a higher low, I see a higher high. So remember the other day I was trying to explain this where we have a conflicting situation. One time frame says one thing, right? The larger time frame says bearish, but these smaller time frames are showing us a bullish structure. I tried one short. That short completely failed, like in 2 seconds. Okay, no problem. So maybe I need to be working on the long side. Now, let me see. I'm not in counter trend mode, am I? Let me see here. No, I'm not. I'm in regular mode. Now, the trends on these time frames, is this one red? On the 1 minute, the trend, no, the trend is bullish. Okay. So what I'm gonna do now is I'm not gonna fight this market. I'm not gonna short this unless we start breaking supports. So what I will do is I'm just going to follow the momentum on this time frame. Now the trend is bullish, right? Now remember, on a 30-second chart, this changes a lot. It changes a lot, so I have to be very aware of it. Now, these time frames are very hard to trade, by the way. All right, this game is a little easier if you're working on a 5 minute or a 15 minute, stuff like that. And you can use a Trade Scanner Pro for that. The thing is, I don't demonstrate that because then I'll be sitting here talking for 5 hours waiting for a signal. Right now, so what I will do here is I will work on the long side until this thing proves otherwise. So we did we conducted some analysis. It looks like the market's changing. I'm not going to fight it. I'm going to switch now to the long side and look for long signals. And look, this thing, I don't have to change the counter trend mode because this thing says bullish right now. Now, keep in mind, this thing may pull back like a little bit and this thing may turn bearish again. In that situation, I will have to switch back to counter trend mode if I'm looking for longs. Now, so I have to set up some rules here. If we break like this midpoint with some type of conviction, then at that point, I will consider shorts again at that point. But right now, I'm not going to fight this momentum. This structure is bullish for now. And while it's tempting to short this again, I mean, maybe the 1 minute, let's see what that 1 minute looks like. I mean, we do have some resistance over here. Well, it's like up here. Maybe I'll be open to that. But is this trend, the trends, I'm going to have to just follow the trend. Look, this is bullish. So, you know what? I'm not going to do anything. I'm not going to fight it. This structure is bullish structure. I'm not going to short it again. Okay. So if I have to lose $60 for the day, okay, that's better than 400, which is what I've been giving back like each day. So what is my P&L over here? Yeah. So that's I'm still actually positive on the account, but I was up $1,000. I gave most of that back right in 2 days. So that's not cool. So that's okay, no problem. The market's hard. I'm going to pull back a bit. So what is A saying over here? Like putting up a code for 2 weeks for 30-ish minutes into the live stream to reward people who are watching the live streams. That's a good idea, A. That's a good idea. Thanks for that. The EU has been very, very bad to us. I recommend a 50. Oh, is that are you in the EU? You for some reason I thought you were an American. I don't know why I thought that. UTXO. Maybe your sarcasm is very. I don't know. It's just the impression I got. Thought maybe you were like a guy from Florida or something like that. You know, one of those Florida guys. But yeah, the EU stinks, man. I mean, they got like a regulation for like everything. So that's why that Italian guy was telling me. He's like, yeah, I have to do it like this, otherwise it's I can't do it. I can't sell my script. And I was like, oh man, that stinks. So, but he gets by. He does well. I escaped from the EU to Florida. I escaped from the EU to Florida. Oh, so you are a Florida guy. How come I knew that? So you were an EU guy originally and you moved to Florida. Because you sound like a Florida guy for some reason. You a sound. I don't even hear you. You text like a Florida guy. I could tell from your texts. All right. So anyway, yeah, man. So look, in a tough environment, look, we have to learn from this. Like I always tell people, this game is the art of adjusting. So if the environment is tough, and this environment has been tough. I mean, the whole week, I've been having a hard time with my other accounts as well. And when I recognize that, I pull back. Right, smaller size. Don't be so aggressive. If momentum is going to be limited, or the market just follow through is not happening, or the market can't get out of its own way, when you're seeing that, pull back. Hold off. Take some time off. It's okay to take some time off, right? And wait, because there are environments where the market is easier, and there are environments where the market is harder. Now, I can't tell you exactly why the market is harder. I suspect it has something to do with lowering volume. When there's a lack of momentum, when we don't have a nice clear cut trend going one way, like going like back in April, things were moving, right? Things were moving in a big way. Now things are tight. I mean, look at the risk on the Trade Scanner Pro. We went from 200 points a minute to back to 30 points a minute on the risk side. So that says something about the environment. So we have to recognize that, right? Maybe it pays to work on bigger pictures, waiting for levels on bigger pictures. The smaller picture just becomes uh, too noisy. And that's okay. It doesn't mean you change your strategy. Like I'm not changing my strategy. All I'm doing is being more conservative because I know my strategy works, right? And I've proven that over and over. So my strategy isn't the problem. It's the environment. Now, can I come up with a better strategy for this environment? Well, what am I going to do? To take try to play these little tight ranges, and it's just easier to pull back, and just wait for things to line it and just be more patient. It's hard. Look at this. Good thing I don't keep shorting this. Look at this. Right? Okay, so I want to work on the long side. Great. But I got no signals right now. What do? I'm not going to change my time frames, right? I can look, like we can look at a 15-second chart. Is there anything here? No. How about a 5-second chart? I'm just looking. I can look. Let's go to a 5-second chart. Right? 5 seconds. Anything here? Not even. Look, I got a heads. Oh, there's a signal back here. I got a heads up over here, but that's it. So, I mean, this market stinks, man. I'm not gonna jump to other time frames. Like part of the parameters for this evaluation is I'm sticking to the same time frames. You have to stick to your time frames, whatever they are, right? So my time frames are 30-second or 1 minute. I'm not going to change that. you know, you could, if I want to work, I don't like 5 second or 15-second time frames. They're just way too erratic. There's too much noise. And yeah, they work out once in a while, but most of the time you're just asking for trouble, right? So I like something that's a little more stable. The 30-second is bad enough, and I deal with that. The 1 minute is more stable. For some people, they're like, man, these time frames are too, they're too hard for a lot of people. All right, I understand. I've been doing this a long time, so I understand how to adjust to these. It's not easy. That's why I say for beginners or someone that you're still developing, work like on a 5 minute chart, work like on a 15-minute chart. I mean, look, we'll switch to a 5 minute just to look, right? Look, here's a 5 minute chart, right? You don't get many signals, as you can see, right? So there's a lot of waiting around, but that's what you set up your notifications for. How about a 15-minute? Anything here? Now look at this. This market sucks. Look at this. I mean, look at this overnight range. We could draw like a rectangle on it. Look at this. Most of the price action is inside of that range. I mean, we can even close it up a bit. Most of the price action is inside of there, just overlapping and overlapping. So, and we're overlapping again off of this range low. I mean, look at this, right? We had this range low and we're near the range high. So maybe since we're in a range, maybe this will turn into a short again, but I'm not going to start shorting it now. I want to see signals. So in these situations, right, instead of just jumping to a conclusion, is okay, it's a short, I'm going to short it. I want to see a confirmation. Now, in order to get a confirmation now, I have to either switch to counter trend mode, which, let's see, is that worth doing? It's worth doing if there's a resistance. Let's check the hourly. Where are we on that hourly? Actually, I could have. So we're not at the hourly resistance yet, right? We still have some ways to go. So that the upper blue line on my other chart is the hourly resistance. Okay, this upper blue line, which was relevant to like yesterday's or yesterday's low or whatever it was. Let me switch back so I can tell you. So this candle is relevant to. I know it's not yesterday. Oh, this is the overnight high. Right? That's today's overnight high. See that? So, okay, so there's some resistance up there. All right. So if I'm going to short it again and go against this momentum, if I don't get any long signals, if I'm going to short it, then I should probably short it up here and wait for a confirmation. In order to do that, I'm going to have to switch to counter trend mode. But I'm not going to switch now. Let's wait until we get up there. Because there's some room to play with here, right? There's some room. What is that? There's a good 50 points. So this thing may continue to rally up there, whatever. This structure hasn't changed yet either. This is a bullish structure still, and we're consolidating. So this is likely to push higher. So with all that being said, right now I'm just looking for reasons to stay out, and I got plenty of reasons. Does that make sense? So that can be very helpful, especially for traders that are not using some type of confirmation tool, because it's very easy to get mixed up into this. You could get mixed up on both sides. You could say right now, oh, it's a long, consolidating for a long. Might be, but then it might break, right? Or you still may be stuck on the short side and saying, oh, double top, blah, 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 right? And you're making up trades essentially. And it's very easy to do that. Look, I could have, if I was making up trades or if I had no way to confirm, I may have shorted it over here. Because look, oh, double top failed high, blah, 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 and it gets squeezed. Right? But I'm not getting into that. I'm not getting into trouble. I tried my first short, got stopped out like instantly. Okay, no problem. I'm not going to fight it. I know this is a tough market, so I have every reason to be more conservative. This really is like a mind game. It's like it's a mindset game, and you have to constantly recognize the character of your environment and adjust. Right? And that's what will save you. In times like this, if you can save yourself, let's say if I was aggressively trying to trade this, I blew $1,000, right? All I have to do is not trade. And I save $1,000, right? Not trade. Very little effort to not trade. All I have to do is walk away and go do something else, right? You don't have to trade. That's the great thing about this is we have that choice. So you have to exercise it. All right. So, hey, what do you say here? You say, oh, yeah, good. Thanks for bringing that up. So opening range, as I point out, I usually point out in each session, you should be aware of the opening range, right? So you want to check your 30-minute chart. Oh, that signal wasn't there before. Why is that there now? Oh, I guess I hadn't checked the 30-minute. So you want to check your 30-minute chart. We'll ignore the signal because I'm not taking signals on a 30-minute. And you want to see, what time is it? All right, so it's after 10 o'clock, right? The 9:30 to 10 o'clock candle, which is your first candle of the day, is this candle, right? This that right there is the opening range. So it's from 9:30 to 10 o'clock. And people use the opening range for what's called the opening range breakout, but I wouldn't use it to take a breakout trade. Instead, I like to use it to just get a sense of bias. If we can break above the opening range high, then that's bullish, and I should probably be looking for longs. If we break below the opening range low, that's bearish. I should probably be looking for shorts. Also, the opening range boundaries can act as a support or a resistance. So look, we're near the opening range high. Okay, that's a possible resistance. If we break above it, it could become a support. That's where I think opening range provides value. If we're inside the opening range, like we are, it could be a consolidation, but consolidation, look at this structure. This is nothing but bullish. I mean, look at this. Higher lows, higher highs. In fact, I can count waves. This is a wave 2 right here. This structure inside is a wave 3, right? This is a wave 3 right here. This right here is a wave 4. And we're in a fifth wave if we can make the higher high. Right now, we're still stuck in the wave 4. We haven't made the higher high. So this is still a wave 4. But once we break above, that becomes a wave 5. And that would be ideal going into that resistance, right? And of course, I just finished talking about the Bitcoin situation. When you can count 5 waves, a corrective wave is likely on the horizon. No guarantee, of course, I have to say that, but it gives us a sense of probability, right? So I shouldn't be going nuts going long up here, is what that tells me. And I still don't have any signals. This would have been a nice long, right? But I don't have any confirmations. So I do nothing. I can't lose money if I do nothing. Of course, people say, well, you can't make money either. That's right. But this is a game of risk. So in an environment where it's very easy to lose money, I want to be more risk adverse, right? So forget making money. You want to control risk. If you control risk really well, money is a byproduct. One of the biggest problems I think, especially new traders have, is the focus on the money. I need to make money. Of course, we need to make money. I understand that, and that's a valid concern. But if you focus on that, you're very likely to get sucked into that gambling mode, or that desperate mode where you're trying to grab any little pattern or any little thing. You're just trying to force trades, and all that will do is cost you money. Uh, can you see if there's a signal on the daily chart? Sure, might as well, because there's nothing going on over here on Bitcoin. So we can go to Bitcoin perp, BTC, right? Or let's see, can I type in Bitcoin perp? I was talking to some people. Go to Mexi. Look at that on the daily time frame, huh? Let's take a look. Anything here? No, there's no signal. Well, I mean, what kind of signal would you be looking for, Hussein? Would you be looking for first of all, this time frame is still bullish, although it may be changing, right? The daily time frame is still bullish. We haven't broken any major supports yet. We broke this little minor one over here, but that's, this corrective structure, it's very possible that you see some type of bounce here. So I would actually be checking for signals on a 4-hour chart. If you're looking for a swing trade, oh, look, there's one on the 4-hour. You see that? A long on the 4-hour, which, by the way, look, it just basically this was generated like 4 hours ago or 3 hours ago, and the new candle is red. So this situation right here, you might want to wait and see if this candle could turn bullish. This may be a swing trade right here on the 4-hour. I think the bot sent out a signal on that too. It should have actually. But you see that in the 4 hour? When you're dealing with the daily time frame, you should check the 4 hour chart because there's going to be that's where you're going to see signals. And the risk is obviously going to be proportionately lower. All right, so good question there. I'm going to go back to the NASDAQ, MNQ1. So, yeah, good question there. You saw that on the 4 hour? So let's see here. Nugs, no signal. Yes. Oh, no. I should have just read your text there, Nugs. There was a short signal at 107 if you were expecting a pullback. Ah, okay. Yeah. So you see that remember, the signals have to align with your plan or your analysis. Don't take the signal for the signal, right? So the 4 hour, for example, Bitcoin has pulled back into a possible area where you may see a reversal, at least a temporary one. It may be worth a swing trade because the general trend on Bitcoin has not turned bearish. It's not really in a full blown corrective structure yet, right? So there may be some bounce attempt back to maybe 108 or something. I wouldn't be extremely optimistic after that because, again, we have those 5 waves in place. The thing with these corrective structures is you don't know how long they're going to persist for. Excuse me. Uh, Bitcoin could pull back to 95K. It could pull back to 80K. It's hard to believe that it can do that, but that's a risk at this point, right? People at these conferences and all that, no one ever talks about the risk on Bitcoin, right? I never see anything about risk. All I see is how great the future is, and we're all going to be trillionaires, and Bitcoin's going to replace the dollar, and we're all going to own Ferraris. That's all I ever see. No one ever talks about risk. Oh, look, we got a long signal. Okay, let's see how this candle. All right, I'm going to take this long. Okay, long signal on the 30-second time frame. You see that? Now that aligns with the structure. We are near resistance, but look at my profit objective is right basically at that resistance level. So it's possible we can test it. I only have one contract. If this thing gives me a hard time, I'll say goodbye. But, let's see how this one goes. All right, now my risk on this is 23 points. That's nothing. Like that's like if I lose 23 points, that's a win. Okay? So that's pretty decent risk. That's a relatively low risk. So this signal, this is now, keep in mind, I'm not just blindly jumping into a signal here, right? I just finished talking about how this structure is generally bullish, and I'm interested in long signals if we can get one. Well, so we got one, and it's not behaving that great, but it's a 30-second chart. These can be very, candles on this time frame can be very erratic. 1 minute it looks bullish, right? And then it looks like this. So, I mean, look back here. Same kind of thing, right? So let's see how this goes. I may have an opportunity in this type of situation to add. I only bought one. And that's why I'm only buying one at a time here. If this thing doesn't work out, I probably won't continue because I'm just wasting my time, right? So look, we're going back above the blue line. I may buy a second one. Let's see how this one closes though, because I have one. I don't have to be in a hurry to buy a second one. Can we break out above this? Oh yeah, we are breaking out. All right, I'm going to try it. Second one. All right, so now I have two. Okay, so instead of buying two outright, I bought one, and now the market's trying to let me know that it's still strong, so I'm willing to take risk on a second one. Now that why do it like that in this situation? Well, and this, by the way, can still fail. But the reason why I'd rather do it like that is let's say, for example, I bought the first one and it went straight to the stop. Well, I only have one. But if it turns around like this, now I'm getting some more confirmation. Now I'm willing to take more risk. That is not something you will learn from just having the script by itself. It's not intuitive. And you're not going to learn that from a book either. Okay. You're only going to learn that from me showing you. Doing that, like to manage size, it's only 2 micro lots, but to manage position sizing is a big part of this game. about making money, because the idea is to, when you lose, to try to lose when you're small, and to win, to be bigger when you win. If you can have a larger position when you win, then naturally you will make more money when you win, and you will lose less money when you lose. That's how you make money. So people don't realize it's not just about being right, and it's not just about having the best strategy. It's really about position sizing. That's a big component of the whole thing. And I don't see a lot of people talking about position sizing. Okay. I see like the typical, well, you get your risk calculator out and you calculate how much risk, and then you put on your position size. And that's all I ever see. I don't see people saying, well, here's where you add. Or the typical ad is you add on the breakout. Okay. I mean, that's valid. But there's a little problem when you add on the breakout, you're taking more risk on that second one. So it'll when the market's in a nice clean cut trend, it works out nice. When the market is not in a clean cut trend and it's very like erratic like this, putting on more during those breakouts, you get stuck in those fake outs, and then you're putting on more risk at bad prices, right? Where in a situation like this, I try to add like at these lower prices. What time is it? 10:30. Ah, it's a 10:30 candle. I hate being in. I don't like being in positions at 10 o'clock or at 10:30, because you get these erratic candles, right? This candle, there may be news that just came out, and it's random. Like this could have gone green, but of course, because I'm long, it goes red. You know, that's the thing. 10 o'clock and 10:30, you usually see these reactions. See? And it goes the other way. So, I mean, can I add a third one here? Possibly, but I'm not going to do that because I don't like the way this market is. So I'm not going to keep putting on more and more risk. I think two is enough. That's why I came into this day only working with one, and I get stopped out. First thing I do is get stopped out. So I'm not going to keep putting on more and more risk. There, in a more favorable environment, that's really where you want to push. When clearly we're just getting signs that this is not a favorable environment, you don't push. Okay, there'll be opportunities to push. So you want to protect yourself now. Keep your money intact now so that when a better environment comes along, you can push and you can appreciate that environment more, right? Now, the thing about that is we are in a general time of the year where we're going to see less favorable environments. From May to August is usually less favorable, especially August. So if there's any time you're going to take off from the market, it should be August. Like just take the whole month off, right? That would probably be a good idea. And the more favorable times are usually November to April. Okay, and that's all a function of volume. That's all seasonal volume. Again, that's another thing I don't see people talk about. Okay, everyone, I'm going to be a billionaire. Look at my portfolio. I have a Ferrari. That's all I ever see. All right, and I talk about quality things here. I talk about these are the things the retail trader should be focused on: position sizing, risk management, and only you guys appreciate me. Which look, I appreciate you guys very much, and I'm glad someone watches me. Otherwise, I'd be talking to myself the whole time, which I do sometimes. But you know, it would just be nice to see a little more traction. That's all. I'm sure you guys understand that. All right. So speaking of traction, hopefully the market can cooperate with me here because, man, like I like to see the green candles, but I don't like to see red candles after the green candles. Why can't we just get like a line of green? Why can't it just do that for me? It never does that for me. It just like it teases me. It's like, I'll give you a little green. I'm just joking. Back to red. Now I have my trailing stop is now in play. Okay, as you can see, the whole idea of the trailing stop is to reduce risk over time and help me hold on to winners longer. Now, I'm going to have to try to respect this trailing stop. Hopefully, we don't touch it, but if we do, I'm going to have to blow the position out. And I'm not saving much here. Let's see. How much am I saving? 19. So, like, I'm saving like a point. So, it's not really doing much for me, but I have to respect it. Let me load this up for 2. So, if I have to bang this thing out, I'm banging out 2. I mean, I'll tell you another thing, what I don't like right now. I'll tell you what I don't like. This pattern, I don't like this pattern. Okay. This is like a topping pattern. See this? This is a topping pattern. I'm going to try to give it a chance, but I don't like it. Typically, when you see this, like the party's over, it's like because it's not making higher highs much. So all it has to do is break this trend line. If I could draw a trend line there, right? All it has to do is break this trend line. It's sort of breaking there, but not. Trend lines are tricky like that. It really has to like break with conviction. But it breaks that thing, the party's over, right? And I'm long. I'm on the wrong side of the party over here. So let's see. Let's see if this thing can stay. Now again, that's my opinion, right? I don't like it, but it doesn't mean the market's going to agree with me. And I hope the market doesn't agree with me because I would like to see the higher high. But this is why I really cannot trade on my opinions, and I really have to just trade on confirmations, on the general idea, right? We agreed higher lows, higher highs. It's a long. That's not an opinion. That's a fact. It's higher lows and higher highs, right? That's we can all argue that that structure is bullish. Now, at the transition, though, this is where it gets tricky. It's changing. Okay, and this is typically what a transition looks like, but that's my opinion. Okay, the transition hasn't proven to be bearish. It's just a typical, it's like a tendency, it's a sign that I don't like, but that's my opinion. I can trade on that, but the outcome is going to be random. I may be right, I may be wrong. So I should really let the market make the decision for me. And that's what the whole point of the Trade Scanner Pro is, right? That's why I have a trailing stop. That's why I have a stop. And the market will decide the outcome of the trade, not me. Now, sometimes, as you guys know, I interfere. Like if I'm up like halfway, I'll take some profit off the table. I usually leave a lot of money on the table when I do that, but that's me interfering, right? And sometimes I'm right, sometimes I'm wrong. Um, but ideally, you want to let the market make the decisions for you. All right, the market's the leader here. Like I was going to bring up an example. Um, Hold on, I'm just watching this because I'm gonna have to bang it out again. Uh, so in like I was saying on Wednesday, hold on, I have to bang this out possibly. I'm letting the market make the decision here. Okay, so if it doesn't work out, it's up to the market, not me. I was talking about dating examples, right? I was bringing up some dating stuff because dating is funny. It's a topic I'm interested in. Like I was talking about with technology and human behavior changing, right? Well, in um, dating strategies for men anyway, dealing with women, there's this thing called frame, right? And frame is as the man, you're supposed to be the leader. I don't know if I mentioned this on Wednesday, but as the man, as a high value alpha man, again, this is strategy that's out there. I'm not making this up. You're supposed to lead by setting the frame. Basically, you set the rules, you set the tone, you lead the relationship, right? And the woman is supposed to submit and follow. Like if you're in that situation, that's the optimal situation. If that's what you're looking for, right? Some guys like to submit whatever, but that's your business. Um, in the case of the market, the reason why I bring that up is because in the case of the market, we have to rewire our thinking because the market is the one that sets frame. The market is the masculine in this case. And whether you're a man or a woman, we have to think in the feminine. I don't know if I should use those words, but that's the word, feminine, because you have to follow. Okay, so the market sets the tone, the market sets the frame, and you have to submit. That's the market. That's the same as saying the market is always right. Okay, that's the market. If you think any other way, it will cost you money, a lot of money. That's it. Okay, fighting the market is like fighting the ocean. You don't fight the ocean. You learn to work with it. Okay, the ocean determines how things are going to go. Okay, so uh, A has a question saying something here. Let's see. How can I tell between something that looks okay, that's an interesting question. Let me see what other questions I have here. Wow, love this topic. I know. I get. I, I don't know how many of you guys follow that stuff, but I follow it closely because, for one, I need a lot of help in that area. All right, like I was saying, if you want to take dating advice, I'm definitely the wrong person. I would if I start a dating podcast and you guys want to call me out as a fake guru, I will be very happy to accept that because I would be the fakest of fake gurus. Okay, with my Ferrari behind me as a dating guru. Um, I am the worst person to talk to as far as strategy, but I like that. I like that type of content. I'm very interested in it from a number of perspectives, just the human behavior perspective, because I've always found women to be very mysterious until you learn that really their patterns are not mysterious at all if you learn how to read their patterns. But tell you, the market is easier. Let's just put it that way. Okay. Patterns in the market are easier than patterns of women. But there are behavioral patterns, and you have to learn to recognize certain things. And it's very subtle, and it's not easy. So anyway, that's how things are these days, man. Uh, that's how things are these days. And thanks to technology, it's even harder. It's gotten a lot harder. It's not easier for especially for men. It's harder because of the magnitude of competition and stuff like that. Like it's changed dramatically. I mean, if you think about 30, 40 years ago, how things were, everything was kind of limited to your local situation, right? If you were like in a small town, you were part of the dating pool of this small town. So the more dominant guys, whatever, and they would get the girls, but average guys also had more of a chance. Man, this thing sucks because there was less competition in general, right? Because you were in your small town. If you wanted to meet more people, you'd go to a city and you'd meet more people, right? And there'd be more of a, again, I guess more competitive, but still, you were still limited to that locale, that type of environment. Today, it's global, right? So some dude like in another country can message a girl here and be like, "Hey, I'm having a yacht party in in Dubai. I'm inviting you." You know what I mean? Like, so the local guy can't compete with that. You know what I'm saying? So, I mean, that's kind of an extreme example, but that is a thing that happens today. So, and the stuff I'm talking about is sort of like in an isolated area. Sure, look, you could go on dating sites and you could meet girls and like all that stuff is possible, but there is a certain measure when you're trying to meet a certain type and this and that. There is like a what I like to believe there's a science to it. It's not like it was, back in the day, things would just, at least for me, you would just kind of, things would just kind of happen. You just like, yeah, you meet someone, you kind of like each other, you kind of deal with each other's nonsense. And that's how things would happen. It would be like more spontaneous, more uh, left to chance. Where today, I think things are a little more calculated. They don't have to be, but they can be. Anyway, all right, enough dating. Why am I? This is not a dating stream. I'm trying to make money here. I'm trying to make money so I could meet a cute girl. What's the motivation for money anyway? The only way a local guy can compete is if he picture himself. Yes. Well, yes, that's status, right? It actually, UTXO, it doesn't have to be a Ferrari, but it needs to be a high status photo. So you can have if you can't afford a Ferrari, for example, you could take a picture in front of a, let's say you go to another country and you go to some famous location and you take a picture of yourself there. That's better than taking a picture against a white wall in your apartment, right? It's a higher status picture, so it's more attractive. It gives a higher status feel, or it tells a higher status story, similar to the Ferrari effect, right? It's a similar idea. Anyway, visionary trader, hey, what's up? I bet, yeah. If you only knew, man. No, I'm not being humble. I'm being honest. Okay. If I was like revolving door of women over here, I would be probably in a better mood. Maybe, I don't know, but no, no, man. It's very hard for me. I now it's not like I don't meet girls. I meet them, but that's as far as it goes. I mean, I'm involved in the social scenes around here. I meet plenty of girls, but girls are very, you have to understand something. You can put girls like on a, and guys too, you could put them like on a hierarchy, and I hear a lot, whoa, you're picking girls out of your league. What league? I like younger, pretty girls, man, and they don't like me. So, so you go, oh, you're being too picky, maybe, but I'd rather be that way, and and stick to my plan, right? And I'd rather be alone rather than be with someone and just settle with someone, because then you're going to be miserable. And trust me, I've done that, and you're just miserable anyway. So it's easier to be alone. It's a lot easier. I can do whatever I want. I got no one telling me what to do. I got no one telling me, oh, we have to go to like a barbecue to see my friends on. I don't have to do any of that nonsense, and be with people I don't want to be with, and all that kind of stuff. I decide where I want to go, right? All that. So I can't have. I'm not looking for a boss, and trust me, I've had enough of bosses, because, like I said, like my younger years, I was completely ignorant to this stuff, and you know, it's. I think it's part of their nature to boss you around. It just happens. Even nice girls, they boss you around if you let them, because that's what they do. So no bossy girls, man. If you're bossy, we could be friends, but go boss someone else around. I got enough problems. All right. Anyway, like this market here, this market is sucking here, and not in a good way. All right. So yeah, enough dating advice. I'm definitely not the right. Ooh, I got to get out of that. No good. Come on, man. Why is this market so lousy? Let me see how bad this is. $164. All right. Look, I'm only up $34 on this account. I blew all of my profits. At $1,000, I blew it. Well, I mean, the account's not blown. I just gave back my profit. Okay, so here we are at the range low. All that while I'm talking about my dating. See, that's why I shouldn't talk about dating. All right, so A had a question here. How am I doing with time? Oh, I'm over on time anyway. All right. His question back here was, where was that? He had a question here. Where was that? I'll answer that question. Uh, it was about here. Where is it? Yeah. How do you tell? Okay. So to answer your question here. In fact, I'll put the question up so people can see it. This question right here. So, how could you tell? Usually by a pattern. Oh, look, there's another signal. Usually you can tell by a pattern. Okay. Now, all right, let's see. Let's see if this signal is worthwhile or not. If it is, maybe I'll try it. Let's see. Or like if we're just gonna pull back. See, look, they stopped me out, and then we get this nice big green candle. Okay, which tells me that it's not selling off, right? Because you shouldn't see a big green candle when it tests so low like that. Are we gonna be green over here or what? All right, so what I'll do, all right, I'm gonna try this. I may not be happy about this, but I'm gonna try it. I bought two because we're in a consolidation, right? All right, so to answer that question, it's really about a pattern and a confirmation, right? It's the thing is the confirmation is the key to the whole thing, because this type of pattern is typically a topping pattern, right? But the other thing with the pattern though is the location. That's a big part of it. The context of the location, right? The resistance that we've determined is up here. This pattern is appearing just below it. It's tricky. I think this pattern would be more of a bearish pattern, more likely to be bearish if it occurred up here, right? But it's occurring just below it. Not only that, but so that's really the best way you can gauge something like that is the location. Now, let's just say you're like, all right, this is close enough and I'm going to short this, right? Let's just say it's close enough. I see the pattern and we're breaking the supports. No matter what, this really, it's just all about the risk you take. Because look, if you just shorted that just now you're sitting in this thing going, well, what just happened here, right? The fact that it tried to break and then it squeezed as soon as it tried, like it just completely squeezed. When you see that, that's that means it's not weak yet, right? This is all this thing has done is sucked in a bunch of shorts and now they're caught. That's all it's done. So that's why it's like, so maybe they made that judgment and they said, oh, I think this thing's a short because we have this pattern. It's getting bearish. Oh, look, breakout, right? Their RSI shows a breakout, whatever, blah, blah, blah. Okay. Breakout. And you short it on the breakout. And the first thing that it does is rallies in your face. That's not what something weak should do. It's just this market has no follow through, right? That should have been a short if this thing was weak. But the fact that it bounces in your face, so that's why really it always just comes to it. You have your idea, you give it a try, it doesn't work, you take the loss and you get out, right? That's really the thing. You try the idea, maybe it works, maybe it doesn't work, but there's really no way to know, okay, this is for sure. What would make this more compelling, like I said, is the level, if this was closer to the level. And the other thing is, let the pattern confirm, meaning it breaks, right? It breaks the support. Now we got a lower high in here, but it breaks and retests. That's the highest probability. Let it break first. Don't anticipate the break, right? Like that's probably going to break now. Now that I'm long again. Um, Let it break and retest. Now that requires a lot of patience. So meaning it does something like this, right? It breaks lower, it breaks and you miss that leg and you're like, okay, you're frustrated, but then it retests, right? This is the highest probability right there, because now you're retesting an old support which should act as a resistance, and that break tells you, the break that's in place, you have evidence of it, that break tells you that yes, weakness is asserting itself from a level, a compelling level. That would be the higher probability. Like, sometimes you see these guys who talk about like an A setup. They have like an A setup, a B setup, and a C setup. The A setup in this scenario would be you break first and you retest. That's the A setup, because this has a higher probability of saying, okay, the next leg is going to be that, right? That's a higher probability of that, but it has to break first. Does that make sense? So that would be like an A setup situation. Of course, the A setups are going to be less frequent. They're going to be rare. They're going to require a lot of patience. Okay. But the A setup is really where you're supposed to go in with your bigger size and all that. Now A says, right, trade the reaction since people would want to protect their shorts. Well, I mean, I don't know. Yeah, I guess you could say that. I don't know what the logic would be. It's just that what typically happens, man, I'm gonna have to bang this out again. Okay, that's it. They push me out of this. This market stinks, man. Um, it's I don't think it's I think it's what happens is when it breaks, right? Someone takes the risk. Maybe someone big gets in, right? Someone causes the break because maybe some size hits the market, whatever, and then you get the break, right? The break is your confirmation, and some people are going to trade that breakout, and they're going to jump in on that. All right, I have to bang this out. That's it. No more. 273. Nah. All right. I'm not going to take any more. That's it. I'm done. So it's 3 trades, man. All 3 stopped out. So this market, like it keeps trying to it keeps stopping me out, and it keeps reversing at that level. Now, so here's what I was going to say. Some people will take this break, right? Some people will it's a bigger risk because of the fake out. Right now, when you get this situation right here, it's not that they're protecting their shorts. It's what's happening is you have people that are long over here, usually, right? Like me, I keep buying, right? So you have these longs and they don't use stops. So they have an opportunity to break even. So what happens? They all get out, right? And they want to break even. So it attracts more selling activity. And then you get the new shorts who will look to enter on this higher probability, and then you get the follow through, right? That's the theory behind it. That's why if you wait for the break, what happens during that break is people are getting caught. People are now caught on the long side, and they're happy to get out. Okay, so it's not that they're protecting you, because you can't really protect your shorts. I mean, as far as like, I mean, if you have stops up there, you're buying anyway, right? If you have a stop up there, you become a buyer. Does that make sense? I know that might be confusing. I mean, that's a more involved topic. I don't know if that makes sense. Does that make sense to you? Sometimes I explain things and I'm not sure if it sounds clear or if it sounds more confusing. So, I mean, look at this. Let's look back at our let's look at our 30-minute chart and just see how things are changing here. So, we're just fooling around inside this range, right? We had this nice bullish candle which is not following through, but it's not selling off either. See what I mean? Like, again, shorts may have gotten into this. You short right at the bottom of that, and now it's going against you. See what I mean? If this thing gives me another signal, I mean, I still like the long side of this, but it's just not following through. Right? I bought this thing here, it gives it back, and then it stops me out, and look, we're back up to where we were. I was thinking there was a lot of fighting in the range, so it's kind of like, well, yeah, it's not that. Remember, there's no one really like. I don't think we could think of it. I don't know if it's plausible to think of people trying to protect. Like you can't really assert yourself against the market. Even large players can't do that. They really can't because I mean, I guess you could do it to a point if you have really deep pockets, but it's really more about people getting stuck, right? Like again, this was a short squeeze right here. Look, this is probably going to be the one that goes to the new high anyway. This looks like another, people are trying to short these breakouts and it's not working. And then this happens. So they all have to cover. But if we broke below, remember, there are people that just go long and they don't use stops. They just buy. They just buy and they hope for the best. And when you get these consolidating markets, it works really well. When you just buy and you buy a little more if it goes lower and you buy a little more if it goes lower, that dollar cost averaging. That works until you have a sustained move one way or the other. They call that grid, like grid trade also. Like it's like you're on a grid and every 50 points or every you're buying more and you're buying more and the market reverts. Yeah, great when you have this situation. But as soon as this thing breaks out, you get hammered. Trust me, I've tried it. Right? It's like, oh yeah, making money. This was easy. And then you buy more and you buy more, and then you have a break. Maybe some news comes out unexpectedly or whatever, and you get a massive move. And now you're stuck. You get stuck in the position. So that I've done that. It sucks. Tesla. All right. I have a few minutes. You can take a look at that. What time is it? Yeah. All right. I'll be wrapping this up soon. I mean, this market, even that long, look, that long stunk too. Look at that. Look at this. All right. We can take a look at Tesla. All right. And I guess we could take a look at well, I guess a 30, what time frame you want to see? Like a 30-minute? Let's see. I mean, this stock, it's going to be similar to the NASDAQ, usually. Maybe not exactly. This is a 30-minute. Um, let's go to a 4-hour so I can see a bigger picture. So generally bullish. I mean, look at that. generally bullish, right? Coming out of a consolidation, trying to. Look at this. Failed low situation right there. So, I mean, if you're thinking of a swing trade long, a 4 hour close like that would be a good start. Your risk can be defined by these lows right here. So if you buy it and it turns right around and goes lower below that low, what is that? 350. You could It's 353, but you could round that to 350. That's a good place to measure risk from. That low should be maintained. If that low is broken, then you're looking for a corrective move. But right now, if this is it, if this is your consolidation, this is consolidating to go higher if this low holds. Okay, so I would anticipate at least a test of this high. What is that? 368, 370. All right, let's see what's going on here. We may get another. If I get a long signal right at this low on the Nasdaq, I may take one contract. All right, you got that on Tesla? All right, so I'm back to the Nasdaq here. But man, talk about no follow through, man. Okay. Yeah, 4 hour. 4 hour, like if you're looking for swing trades and stuff, 4 hour I think is it's almost you're getting like the same opportunities on the daily chart because it's just a more granular look at the daily time frame. Because 4 hours on a stock, right? That's 2 bars equals 1 day. On a daily time frame, 1 bar equals 1 day, right? So on a 4 hour time frame, you're basically just seeing 1 day just in a more granular way. And the other thing about the 4 hour time frame is I think you can manage your risk more optimally because you can see levels more clearly, right? Like we just saw there. So yeah, I would certainly be, if I was working on that stock, I would certainly be leaning on the long side. Now, with that 4 hour situation, with that strong candle, if I was working like on a 1 minute, I would be looking for confirmations on 1 minute, to go long, for example. Okay, look, we got a signal here on the one. Speaking of the 1 minute, what do we have here? So what is that? Oh man, it says 21 contracts. I don't want 21 contracts. All right, I'm going to try this one. I'm buying one contract. I'm going to try this. We're going to see how this goes based on the 1 minute. I hope I don't have 21 contracts. I'll be in trouble if I do because I can afford 21. This account allows me, yeah, one contract. This account allows me to trade 100 micro lots. Right? It doesn't matter if how much money is in the account. I could lose $1,000. Like I could be minus $1,000 in the account, and I can still trade 100 micro lots. Right? That's one of the advantages to using a prop firm. And 100 micro lots is 10 mini lots. That's a gigantic position. If I took a position like that, 10 mini lots, and I made 15 points, I would reach my profit objective in like a minute. But if I'm wrong and I lose 10 points, as you could see, I was wrong 3 times here today, I would blow my account in basically a minute. Right? That's a valid game, actually. I shorted. Oh, really? Oh, you're right. Huh. Thanks for pointing that out. All right. Well, it's actually I'm gonna have to buy that back right away. Let's see. I got a pin bar. Thanks for letting me know, guys. Maybe it goes to the stop and I'm short. So maybe I fooled the market and I said, hey, market, I'm going long. Really, I went short. That was a mistake. But all right, I get some red candles. I'm not going to stick around for that, though. That's what happens when you talk and trade at the same time. Yeah, thanks for letting me know. I'm not gonna, like, since this is like a mistake. Sometimes, hey, sometimes the mistakes you make money on. Let's see. But I'm prepared to blow this out right away because I want to be long. Right, so I'm out. All right, I'm gonna get long now. Now I'm getting long for real. Okay. because we're getting that green candle. Yeah, I don't want to be short for we see what keeps happening to the shorts, right? They keep shorting this thing and it keeps running up in their face. So I don't know. If this market, like whatever, I only have one contract. I'm not even going to let this go to the stop. If it gives me a hard time, I'll just get out. Like if I see like a sharp red candle, like I see something like that, I'm just going to blow it out. See, like that. I'll give it a little bit, let it close. I'm not going to, I'm just, testing out the market here, really. If it wants to give me a hard time, I'm just going to say goodbye. I'm over my time limit anyway here. Talking too much. If it wants to, let's see how that goes. Yeah, and we're going into like so over the next couple hours. It's a Friday. We're going into noon. It's usually a bad time to be involved. Like if you can't make money by noon, trying to trade the afternoon is usually a bad idea. I've tried it. That's why you're better off just taking off. All right, you know what? I'm getting tired of this price action. Yeah, goodbye. I'm done with this. I'm getting out. I just don't like the shakiness. It's like this thing. Maybe it goes, maybe it doesn't go, but it's too erratic. Like this, if this thing is going to be strong, really, the candle should be like this. Oh, there it is. They're like, what? Wait a minute, what? You said strong? See, but look, it gives it right back. What's going? Is there news or something? It's like jumping around. So yeah, I'm not gonna get mixed up in this anymore. How much I give back today? Let's go back to this. 259. Man. So I'm back. Oh, now it goes. All right, whatever. It's all right. I'm not going to keep messing with this. I'd rather lose again. What was that? 250. So $250 is better than $400, 400 and whatever, which I've been losing. These previous couple of days. So all right, no problem. That's the whole idea. Got to contain the losses when it's a tough environment like this. I tried a few times. I can't get it going. Okay, don't keep pushing. Very simple. All right, guys. So I'm going to wrap this up. I've been talking a lot longer than I should be. If you want to try the Trade Scanner Pro out, if you're watching me on Twitter or whatever, by the way, do me a favor, retweet the stream. Even though it's a bunch of losing trades, there's still a lot of learning lessons here. And yeah, really interested in the Trade Scanner Pro. Is it automated? No, no. So no, you have to take the trades yourself. It's not automated, right? So if you read the website, if you go to the link, you read the website. It's you have to take the trades. So what it does is it simplifies the decision making process. And watch all of my previous streams because you have to do the analysis process, which is very simple. I show you how to do it on every stream, right? You find your levels, you find your general trend, and then you look to confirm ideas on that side. And as you can see, this market has not been cooperating, and I've been trying, and it just doesn't work, right? It hasn't been working. So if momentum is lacking, it's going to be very hard to make money no matter what you do, right? And that's what it seems like here. Momentum is lacking. We're not getting the follow through. So, I mean, look at this trade. If I was still long this trade, I'd be looking to bang this out again, right? Like this is the lack of follow through here. So you could try it out for 14 days and see what you think. Okay, try it out, but watch my streams first because you have to do that two-step analysis. Find your trend, find your levels, and then confirm on that side. And you have to know your time frame in advance as well, right? Like if you know you work on 1-minute charts, you have to be analyzing for 1-minute charts. If you're going to work on 5-minute charts or 15-minute charts, you have to know your time frame first. Don't jump on a signal first. This signal could be random. Okay, that's the thing. Okay, cool. So yeah, if you have any questions now, I'll be streaming again Monday, right? Same time. So this is an opportunity to ask questions. If you're using the Trade Scanner Pro, use this time to ask me those questions. All right, you guys. So I'm going to wrap it up. Thanks for watching. Enjoy your day. Enjoy your evening wherever you are in the world. And again, thank you very much for watching.